Hey traders, Raghee here. Here are the three things to do in this market chaos. First up, do think about defensive sectors like XLP and XLU. So if it's Walmart, Procter & Gamble, Coke, or even XLP, the consumer staples sector itself, look for opportunities here because when there's volatility in the indices or weakness in the indices, staples tend to be the beneficiary of the mindset of no matter what happens in the economy, we're always going to need toilet paper, power, and pills. That brings us to the second sector to think about in the defensive sector, meaning where money tends to flow in times of chaos. Utilities. Well, we all need to keep the power on. And as a side note, a lot of the AI narrative is going to continue to benefit the massive power requirements. So while this is not an AI move, it can be, but for now, it's definitely a defensive place to be. Keep an eye on the XLU, NEE, which is Nextera, names like Southern, Dominion, and Duke, high concentrated weighted names in the utilities sector. Also, think about defensive sectors as in aerospace and defense. The second thing is do think about outperformers in this current geopolitical environment. That brings us to ITA, which is the U.S. Aerospace Defense ETF. As long as geopolitical tensions are high, it makes sense to keep an eye on names like RTX, on names like NOC, LMT, LHX. These are all names that continue to move higher in the strain and tensions of the current environment. Look for opportunities to buy the dip in ITA names. Now, along with that, keep an eye on the XLI, which is industrials. Industrials and the U.S. aerospace and defense sector overlap quite a bit. And you'll see, despite all the chaos in the Dow, the industrial sector is still in a strong uptrend. Last thing, do think about longer term positions that benefit from the volatility, especially after 10 and 20% drops from highs. All right, for this, I'm going to take a look at daily and weekly time frames. So this is about long-term account growth, long-term positions built on the weekly time frame. When volatility is high, find the time frames that act as shock absorbers. In this case, what we're looking for example, and we'll grab a popular name, something like Microsoft. Any name that's been down to the point where people are really starting to fret about the weakness. Now we want to go shopping. On the daily chart, you'll see I have a study that's running up here in the labels, and this is called the Sanity check. It looks at the all-time high, and I like to go back about 12 months, no less than 6, but about 12 months, and look at what the all-time high or the most recent high in the last 12 months was. This tracks that. Then I want to look for a pullback from that level. So for example, the word crash, a lot of people get panic-stricken when they hear it. We want to think great sale price. Microsoft has indeed crashed. It has moved through $444, actually hanging around $400. So it's made more than a 20% pullback. What we'll look for is Microsoft to stop trending lower, because it's still in a downtrend on the weekly, and then we'll look for an opportunity to buy once the market structure goes neutral. And these are important things to keep in mind because a lot of traders will forget that one trader's crash is another trader's treasure. Look for those 10 and 20% drops from those all-time highs or highs that have been established in the last 12 months. Look for the pullback and make sure you're not buying a downtrending stock, but that it's on the radar for a buy. And that's exactly the three things that I would do in this market chaos.